Oh, okay. So open the file and just compare the answers. So in our first, So in our first transaction, February 1, Luke invested 100,000 in the business in return for common stock. Here we go, right? Cash and then common stock. And then, a second, I have to adjust the controls. Here we go. Yeah. Okay. So the second one, the business borrowed 50,000 and signing a notes payable. So which two accounts, cash and notes payable? The February 8th, the business paid cash for a land costing 105. Paid cash, mean land and cash included. So plus minus equation is balance. February 11, the business purchased medical supplies for 1,700. Purchased medical supplies, it means supplies and cash. So cash is negative and, on account, On account, which is that you purchase on credit, so accounts payable and medical supplies. February 12th, the business is officially open. There is no financial impact, no entry. 14th of Feb, Duke treated patient and earned service revenue of 5,600, receiving cash, half of the revenue earned. It means half cash received, half customer increase, and services was delivered for 5,600, right? So there are three accounts going to be disturbed here and here. Understand, everyone? February 16, the business paid employees salaries 2,300 for the first half of the month. Paid salaries, that's it. Cash decrease, and salaries are expense. Expense belongs to retained earnings. 25th, Dr. Luke treated patients and received 1,500 cash at the time of service. Here we go. Cash sales, cash or cash services. See, sales are here, cash received here. February 28, business paid rent, of course, cash decrease, and expense also decreases the retained earning. The next one is the business paid 500 on account. Business paid 500 on account. So this is a little bit tricky. Business paid 500 on account. So to whom business paid? So if question is silent, so use your logic. So what is the operation of the business? To sell goods, to purchase goods from suppliers. Sells goods to customers, to purchase goods from suppliers. So the business paid 500 on account means business will pay 500. Previously, he received goods from the supplier and now he paid back, right? If the question says that the business paid 500 on account on rent, then you know that, okay, this is the rent that we are paying that. Otherwise, if question is silent, always remember that we're talking about suppliers. So you can see the total of each account is 4,500 here, 2,800 here, and wait a second. Here we go. So it's 1,700, 105 here. So total assets are 155 and total liabilities are 1,200 and 50,000. Common stock 100,000 and retained earning 3,800. So total is equal to 155 as well, right? So look at our requirements. How much are the total assets? 155, right? Total assets are 155,000. B, how much does the business expect to collect from customers? Simple, 2,800. That is yet to be collected. Collected, and always collected from customers, right? Not paid, collected. So how much does the business owe in total? We are talking about the business owe in total, not own in total. Owe, which means business has to pay to its outsiders. How much total? Total complete liabilities. This complete head. Under this head, we have accounts payable account and we have notes payable account. So total 51,200. How much of the business asset does look really owned? Means we're talking about how much is the shareholder equity, which consists of retained earning plus common stock. How much? 100,000 plus 3,800. Right? The last one I think is how much net income or net loss did the business operation expect? What are the sales? We know that sales are 5,600 and expenses are like this, negative side. So answer going to be 3,800 because we don't have any beginning retained earning and we didn't pay any dividend. So look at the formula for retained earning. Retained earning at the beginning plus net income minus dividend is your retained earning ending. So do we pay dividend? No. Do we have a retained earning at the beginning? No. It means income. Or you can say that we have sold 5,600 worth of sales here and 1,500 worth of sales here minus this 2,300 and 1,000. Answer would be 3,800, right? And now we are diving deep into the real accounting. So till now what we have discussed how we can analyze our transaction, what will be the financial impact, how through accounting equation we can make income statement, retained earnings statement and balance sheet. We did our breakout room activity as well. And now let's talk about the analysis of the impact of transactions on the account. So let's talk about the hot topic or the core of the accounting, which is double entry system, right? So like we said earlier, the transaction has two sides. One is giving and one is receiving. So in double entry system, each transaction at least hit two different accounts. So like we just did this example in accounting equation, each transaction is hitting at least two accounts, either right side of the right side of the transaction or right side of the equation or either left side of the equation, right? At least two accounts. So in double entry system, we don't write plus and minus. We talk about in terms of debit, we represent it with DR, and credit, we represent it with CR. And remember, debit and credit doesn't mean that this is positive and this is negative. No, it's a concept. Most students, they make a mistake. They consider debit as a positive, credit as a negative. No, it's not. So double entry system is that each transaction at least hit two accounts. If one transaction and it is hitting the one account, it means this is not the double entry system. This is not the transaction that should be recorded in our double entry system accounting, right? We just have the idea, we did that. Each transaction is at least hitting two different accounts, right? Here we go. So the T account, so T account is like that. You make a T And on the top of that, you write down the account name. Cash. Let me correct that, my bad. Here we go. Cash. Okay. So the left hand side is called debit. The right hand side is called credit. Right? So how we represent the account? We make a T. The left hand is called debit side. We represent it with DR. The right hand side is called credit. We represent it with CR. Right? And the nature of this account is asset account. The nature of this account is asset account. Right? Because we are talking about the cash. If we want to talk about the notes payable, let me just remove here. Notes payable T account. Let me just write it notes payable T account. Similarly, the right hand side is called credit. Left hand side is called debit. And notes payable nature is liability. Okay? Notes payable nature is liability. So now look at that. So a T account, it records the increase and decrease of a specific asset, liability, equity, revenue or expense element. The left side is called debit. The right side is called credit. So let me just remove this mess so that you can read it by yourself as well, right? So an account can be illustrated as follows. So this is a T account. You see a T here. This is called the debit side and this is called the credit side, right? Account name, you can write down the name here as well, right? Okay, let's just talk about the rules. Since we talk about that, a T account recorded either increase or either decrease, right? So here we go. Now increase or decrease depends upon the nature of the account. So we have how many broad categories in the account system here? We have asset, liabilities, equity, revenue, and expense. Right? So in accounting equation, we have three main head: assets, liabilities, honors, equity. But here we know that the concept is that revenue and expense belongs to retained earning and retained earning belongs to honors equity, right? But here, since we are recording everything separately in T accounts, so we segregated all these. Expense gonna be recorded under expense head separately. Revenue gonna be recorded under separate head, revenue. Liability is gonna be recorded separately in T accounts under liabilities.